Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, May 11th. Okay, got a lot to go over today. A lot of red on the board, a lot of important levels coming into focus. What I'm going to do today is cover off the indexes, the mega cap tech as we always do. But what I'm going to do is zoom out to the daily charts to give you guys some levels to watch on the daily as far as new sell signals being triggered on a number of stocks. Then I want to take a look at the ARC complex, Cathie Wood's ETF family, to see if we can learn anything or get some levels. Taking a quick look across the board, large caps are off 0.8%. The NASDAQ and small caps are off 1.35%. Oil is down 0.6%. Copper is up 1.5%, and precious metals are flat. And as a reminder to everyone, I don't talk particularly quickly, so feel free to adjust the video settings to run at 1.25 times. Even some of you may want to go to 1.5x. I think you'll be able to understand everything, and certainly you can always pause the video and back it up. So I know some of my videos can get lengthy, and feel free to do that. I don't think you'll miss a whole lot. And like I said, if there gets to a part where you want to take some notes, then you can pause the video and then proceed. And as far as notes go, if some of you out there don't have your charts highly developed, I would have a pencil and paper handy, because I'm going to give you some levels on the daily chart to watch as we approach important trend lines and that kind of thing, so you'll know where the trigger levels are going forward. So what I've got here is a very clean chart of SPY. What I've done is drop in the Fibonacci retracement levels off of the March low of last year. We've had this big run up. I've marked from the low to the high, and you can see where these very common retracement levels are. So does that mean they're necessarily targets? No. But if we came down to 345, that's not a particularly, oh my God, significant technical event. That kind of retracement happens all the time. In fact, we often talk about the half back entry on smaller time frames. You know, a stock will go up, give half back, and then proceed on with the trend. So have these levels, marked somewhere on your chart. Now, we're still on a daily buy signal, because we're still above trend off of the March low. So a point where this trend line is violated, then you would be on a daily sell signal. And that'll be important for you swing traders that are, trading on the daily time frame. Context is everything. So for instance, if you're trading, let's just say an hour chart, and you know the daily is on a buy signal, and you're trading the 60-minute chart, that means down moves are counter trend, right? Daily chart on the uptrend, 60-minute chart on a downtrend. That's a counter trend move. So on the 60-minute charts, you would be looking to primarily buy dips, because the main trend is up. Once the main trend breaks, or we go on a daily sell signal, that's when you're looking to fade the rallies and not buy the dips. So the level I have marked on SPY for a daily sell signal is a break of 410.50. 410.50 will put SPY on a sell signal. Where does that number come from? It comes from right here. We've been in this consolidation range between 410 and 418. We broke out. Yesterday we gave it back. That makes this breakout look fake, right? Couldn't hold it. And so now we're testing the prior trading range. And once we break inside, which pre-market we already have, down in this area, below 416.75, in this area here, then the target becomes the bottom of the prior trading range. Remember, just like we broke in here and then we came back down. So a break below 418 today makes the technical target the bottom of the box, 410.50. As long as it holds 410.50, the trend line on the daily will not have been broken, but you lose 410.50, then you're down below and targeting a level, most likely 405 for starters, and then most likely a move to 400, which was an important breakout level from before. Notice we've got a gap here down to 400.61. Because remember, once you break 410.50 to be specific, we're not the only people with charts, right? Everybody and their brother are looking at the same numbers, including the algos. So once you break that level, by all likelihood, that's going to bring in more sellers, right? So that's a really important level, 410.50. Here it is on the 30-minute chart for active traders. We've got this level 416.75. That was important. Your next level lower that I think is important is 414. That was the level that held last week on Thursday. Remember, we had the little rug pull, came down to 414, and then we got a big bounce. Well, I think that'll be an important level on the way down, because you break 414, then that opens up the door to this 411.50 that held here, and then 410.50, which is at the bottom of the range. Let's move on to the Qs. Note, here we have a sell signal. Trend line off the March lows. We're below the 20, we're below the 50, and we're below the trend line off the March lows. So that's a sell signal, right? And so now we see that the 200 comes in at, let's call it 301. So that's definitely an important level. And I don't see a lot on the chart to stop us from finding 305, which is a big level. You can see I got a little bit obscured, but this is a large volume over price bar here at 305. I think that would be a super important level to hold. Otherwise, we got the 200 right below at the 300 price level. Here it is on the 2-hour chart. Tested the gap at 327. Tested the gap again, held. We got that impulsive move higher to the downtrend line, which was rejected. yesterday, a lot of selling, came down to the gap, moved inside where we closed, and we've been talking about for days and days this 324. And if you go back in the chart, there's even other areas of where this was prior resistance. We see resistance here, resistance here, resistance here. And then the breakout, 324 is a very important level. And I think below that, below 324, that brings this gap into play down to 319. And then below that, you can see the intermediate levels, 316, 312, etc. And so for me, no matter, we're going to gap down this morning, right? So you're going to have a gap above. It's going to be important at a certain juncture for SPY to recapture 324. And if it can recapture 324, in my mind, that would be like an important bullish development. But that being said, this morning, key off the gap. Remember, there's going to be a sizable gap above that they may try to, flash fill, buy it up real quick. Everybody think, oh, the sell-off's over, and then bring it right back down again. So handle your opening with care. So for this morning, 319, bottom of the gap would be a place to look for some stability. And then below that, 316 and 312. I'm going to blow past the 30-minute chart. I'm off the scale here. It has to recalibrate. Let's move on to IWM. Still on a buy. Trend line off the March lows. And you can see this is not, a super powerful trend line. We've only got a few touches, but now we're right on it. We're right on the 50. And I would say making a move to 215 would put you on an IWM daily sell signal. So that's my level here. 215 would signify a break of the trend, and then the first target being 205, and then the 200 comes in at 195. So if there's a break today of 215, I'm looking for 205 and then 195. Here it is on the 2-hour chart. You can see here at 215, we had support. We had support, and support. I think that's a big level. The levels below are 212.50 and then 209. And then below 209, we go on down 207, etc. I've moved out on the 30-minute chart just so you can see the levels. We're, of course, going to open below 219 this morning. And here's that 215.50 level here that was important back in the charts. So a break of this level here sends us lower on a daily sell signal. Facebook. We were in distribution for 6 months from August of last year until March. We got a breakout of this range between, let's just call it 250 and 285. We got the breakout, back test, and move higher. Now we've broken the uptrend line off of this low. We're back to this 305 area, still above the 50. today, I think 305 is your pivot. You lose 305, then I think you're coming into the 50 at 298, and then take these levels. 295 was a level back here that was resistance. So that'll be support at 295, and then a much bigger level of support down at 285. So this one's broken trend. To me, that puts it on a sell signal. But we do have some layers of support beneath, potentially all the way back to 285. What would change my mind? If this thing recaptured trend and moved up above 315, then I would call that a stick save and take the pressure off. Take the immediate pressure off. I'm going to go back here to the 60-minute chart just to show you. Yesterday and the day before, remember this was the first initial rug pull down to this 127 level, give or take. We kicked back to 130, retested 127, bounced up to the downtrend line, which was rejected at 131.25. We had that level nailed. Came back down, could not hold 128, and back down to 127. Now this morning we're going to open below 127. So I wanted to show you where we are on the daily. And here's where we're at. Came up, could not get through 138. This is a trend line that you don't want to break below if you're an Apple bull. I've got that level at 124. You break below 124, then you're coming in to test the 200 at 118.50. And then below 118.50, you're looking at 114 and then down below. So notice below all the moving averages, the 8, the 20, and the 50, that in itself is bearish. Got a layer of support here at 124. You don't want that to break. You may see a little bounce there, but on a break of 124, that would put you on a daily sell signal, and then you're looking for lower prices down to the 200, and that would be, of course, a major level to hold if you're a bull. Tesla. Brown is the trend line off of the March low. Test, 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 fail. Below all the moving averages, the 8, the 20, and the 50. In fact, the 20 has now dropped below the 50. So that's a bearish technical event. And you can see that price has broken trend. So that puts Tesla on a daily sell signal below 650, and we had that area marked yesterday on the shorter time frame charts. We called that out as important. 670 was a major pivot level that it broke below on the 2-hour charts, and now we're below 650, putting this on a daily sell signal. I fully expect this to come down to test the 200 at 580. Or excuse me, the 200 is at 580. And then there's a layer of support at 560 at this prior low. If you lose 560, you're coming way down into the 460s, the 420s, and possibly even 400. So keep that 200 in focus at 580, and then mark on your charts this 560 which was a prior low. If you get to the 200, you're probably going to test that 560 level. If you're short, stay short. I'd move your stops to somewhere around 650. Yeah, we're already at 630 here. So I would move your stops down in case there's a little kickback into resistance here. But I expect this to go lower. Microsoft 60-minute chart had to move up into 254, which was prior resistance. Here it was support. Here it was resistance. Here it was resistance. Fell away. Lost 249, which was the bottom of the original range. Came down to 247. And now this morning, we're trading in and around 245, which was the original breakout level. So on the daily chart, you can see this was the level where it broke out, 245, got the move up to 260, and now we're back down right around 245. You can see that I've dropped in a trend line off of this low in November and brought it up here. And just remember the basic tenets of technical analysis. Once you leave a trading range, like we did on the breakout, coming back to back test the breakout is fine. Common move, see it all the time. But what you don't want to see is price coming back in to the prior range and having closes inside that range. When that happens, all these people that bought the breakout and the back test know they're wrong. And once they know they're wrong, they sell. And when they sell, the target becomes the bottom of the prior range down at 230. So below 245 is definitely a danger signal. You break this trend line here, let's call it 242.50. That's an outright sell. And I would be looking for 230 on any kind of move like that. Amazon. We're down $350 from the earnings high, straight down. Free 50 club yesterday on the break of 32.50, right to 3,200. The $50 increments, I say it every single day. It's been working like a charm. Continue to do it if you're trading short time frames. For swing traders, here's an example of what we just talked about. We've been in this range for basically a year. Between 29.50 and 32.50, right? In the range, breakout, fail, bottom of the box. Back up to the top, breakout, come back, come inside the box, bottom of the box. A lot of chopping around, breakout, come back, fail, bottom of the box. Move around, breakout, fail. Price below the 20 and the 50 and now below the top of the box. You've got the 200 coming in at 3,100. At an absolute minimum, we go down and touch the 200 at this midpoint line. But I think it's going to come down here to 29.50 at the bottom of the box. That would be my base case. Could the 200 hold like it did here? Sure. I would watch that area very closely at 3,100. But if that doesn't hold, then that reinitiates a sell signal coming down to 29.50. And that's, that's another $250 lower from here after all that. So I think Amazon has farther to go. What would change my mind? If price came up, recaptured 32.50 and held it. That would be a false breakdown, but given the way the market looks, I think we're going to come down here to tag the 200 first. Google, in better shape than most of them. 60-minute chart, top of this prior trading range. I think we're going to come down and test 22.40 at the bottom. And then below that, you got one last chance at 2200. If 2200 fails, then you got a lot of airspace below, all the way down to like 2060. So yeah, I think at a minimum, come down here to the bottom of the box, 2240, and then there's a big, that'll be a big level to hold for the bulls. Otherwise, we break below, and this whole area here would look fake. They couldn't hold it. Fake breakout, move up, and then come back down to fill all of this void down below. Netflix broke yesterday. We had been watching this 495 level. Support, 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 support. Few tags in here, support, break. Below all the moving averages, your next target is 470. You lose 470. The trading range is $90 wide. So you break below that trading range. 90 from 470 puts you at 380 as a target on a break below 470. So that becomes a massive level down here. If you got short yesterday or any time in here, stay short. I think we're going lower. I think we're going to 470. Let's look at the ARC complex, and I'm gonna keep this part brief. If you're new here, glad to have you. I hope the levels will really help you in your trading. That's what others have found. If there's one thing I'm proud of and trust, it's my levels. You have to work on your own execution, but if you can trust my levels and then work on your execution, I think your trading will get a lot better. Hit the subscribe button, hit the alarm bell, go over in the show notes and register for all my content. Then you won't miss a beat. Longtime viewers, give me a thumbs up, show a little love, pass the link along. Let's build our community. I really appreciate it. So, ARC, Kathy Wood. Bubble stocks defined. And that's not a knock, that's just what they are. Very high valuation names, not a lot of earnings support. That's where a lot of the selling pressure has originated and persisted. So let's look at it. Rocketed higher all of 2020 and then broke trend in mid-February. Came down and found some initial support at the 200 and has held it thus far. Failed at the 50 and back down, closing below the 200 over the last couple of days. I have a support layer here at 105. And then it starts falling away pretty quickly. I have another support layer at 95 right here. But then after that, then yes, there'll be intermediate levels down below. But we can worry about that when and if we break 95, etc. What I'll do in the days ahead is put the fib retracements on. That'll give us a much clearer picture of what the downside targets could possibly be. I mean, I can tell you, well, I don't want to say where those levels are, but break below 105. I think it's going to 95. I am short ARK K, so there's disclosure there, but I think it's going lower. ARK FinTech had this layer here at 49, which broke yesterday, and now we have a test of the 200. That's a perfect level to shoot against if you're interested in a short. Break 47. I think you're coming down here to 43.50, 43, and at that point, probably more sellers will come in. Remember, the 200 is emblematic of, if you're above the 200, by definition, you're in a bull market. You lose the 200, and for many people, that's a no-go line. You lose the 200, you're out. So for a lot of algorithms and trading processes, it doesn't. If you lose the 200, that triggers a sell signal in a lot of algorithms and trading processes. So that becomes an important line. And if you got short, you could set your stop right above the 200 and then use that as your stop and see if you get follow through down into the low to mid 40s. ARK Genomics, very much the same picture. Break of trend, break of the 200, sitting on support here at 75. You lose 75, you're going down to the high 60s, 67.50, and then of course take it from there. You can, if you got short on a break of 75, just set your stop just above. ARKW Web, same. They're all the same. They're all the same. You notice that. I mean, little variations, but they're all breaking their 200 or sitting right on it. Here, yesterday, it broke. Break of 135. I think you got $15 to go before there's a good level of support down to 115. So I think even if you're not involved with ARK, you can use the complex, her family of funds, to gauge sentiment. And, when you see ARK stabilize, that will be a good thing for the market if some risk appetite returns, or at least the selling subsides in those high valuation stocks. One thing that just came to my mind that I don't have the chart handy is semiconductors. It broke a key level yesterday. Watch semiconductors. And just wrapping it up, also, I saw some significant reversals yesterday in the commodity complex. Copper was up 3% and finished red. Steel was up, and most of that was faded. Corn was off 3% yesterday. And remember, these have been on parabolic runs, whether it's just a one-day blip or something more. Watch the commodity complex, because if commodities and energy and financials go, those have been the few bright spots in the market. And that's what's been keeping the Dow up and SPY up. We're just a few percent off all-time highs on SPY. It's been mostly focused on tech, the selling. But you start seeing financials, energy, other cyclical names, the commodities turn red, then it turns into a very, very broad sell-off. So keep your wits about you. Have your levels marked. Know how you're going to react. Honor your stops. Honor your stops. That's your most important obligation, is take care of the stuff that you have and don't let it run away from you to the downside. Take your medicine early. That way you'll preserve capital for a more substantial move. Whether you want to short that or not, that's up to you. But preserve your capital until the pain is gone, and then you can buy at much lower levels, because as we know, bull markets don't last forever, but neither do pullbacks or bear markets. So just honor your stops and preserve capital is the most important thing. Okay, have a good day of trading. It's been Chris Buss with Traders Profit Compass. Talk to you next time.